Good morning, traders. Paul here with GammaEdge. Today is Thursday, the 10th of November. Let's get started. Pause your players here. Read to the bottom. If you agree, hit that play button. Summary for today. All our signals turned off yesterday. They reset to cash or short. Watch for reversal to the upside today, though, due to the CPI. We're also watching for continuation to the downside. Maybe after a short bounce, we continue down. Your crystal ball is as good as ours. Either way, if you don't know what to look for in the cumulative tick model, come into the Discord and ask. Of course, everything here is paper traded. Nothing is a recommendation to buy or sell any security. Our plus GEX level remains up at 4,100. Minus GEX dropped to 3,500, and at the same time, SPX POI, which is the put open interest level, dominant put open interest in the entire complex, has dropped to 3,000 from 4,000. Why that's material is that when we get a drop of price like we did yesterday, we would expect to see the 3,600 level actually increase in its overall gamma exposure, not decrease. And that's because as spot price moves down towards that level, gamma sensitivity increases. That's the whole reason we trade gamma. The other part of this too is that we would expect people to be piling into that 3,600 line, again adding to its overall value. That didn't happen. And so we're going to be watching this 3,600 interplay pretty closely going forward. But all things considered, a drop to 3,500 shows that puts were opened at 35 and or closed at 36. That's important. And the drop of POI, which is not a gamma, delta, Greek, anything, drop from 4,000 down to 3,000 indicates a little bit of closure of that 4,000 strike on the put side and opening of the 3,000, or some combination thereof. We'll know more after the open interest analysis posts at 9:45, but just be aware, underlying, all of this could be bullish, and so we'll just have to wait and see how things go, especially with the CPI print this morning. The expected move today is the highest one day that we've seen in recent history. It's at 5.5% open high-low close, so that could suggest a real volatile day. Everyone should be aware of that. 38.40 is the top of our transition. We are well below that right now. Note that the overhead deltas have become put dominated. Calls were closed yesterday, and that exposes that upside to in the money puts. So that's an important thing to consider. So what we need to do is we need to hold above that 3,800 level. There's a definite line there. And for the bulls to have a chance to continue to advance today, tomorrow, into next week, obviously we need to take that 38.40 and start really setting our sights on 3,900. Now, as I said above, plus GEX is at 4,100, but 3,900 is in close play. So if we start seeing a lot of calls go in at 3,900, that'll be for a short-term target to the top, and then all bets are off as we go into the next couple of weeks. The market model, as I said, we had a number of initial warning signs yesterday. Despite 2 days of increase, this has just been a choppy market. I know it's frustrated a lot of traders. That's the nature of this business. I don't care what system you use it. And at some point in time, as you get through these transition points, and when you see choppiness, you're in a transition. And we certainly are back and forth in a transition. So for those of you not familiar with the cumulative tick model, I've highlighted a couple short-term indications that gave you clear warning signs to exit your longs yesterday, paper trades of course. And then here was the final nail in the coffin where we start what we call a railroad track down pattern. Now, all of this being said, this is if you're butt in seat for the day and can sit in front of the monitor. If you can't, just look at the end of day, right? So you were positive here, you're negative here. If you're playing the market and you know you're in a choppy situation, then expect to get buzzsawed. I hope your position sizing in your paper trades is pretty low, pretty small. If it's not, well, that's something that we can help you with, and I would urge everyone to come into the Discord to discuss position sizing, choppiness of the markets, lack of trend, being stuck in transition, etc., which are all themes we've had for several weeks now. The overall key levels, as I talked about in the beginning, we've dropped from 36 to 35, and POI has also dropped down to 3,000. We're remaining up here at 4,100 for our plus GEX level, which is the dominant call target, and COI, which is the call open interest. It's not a gamma or a Greek thing at all, is remaining at 4,000. Not liquid, very strong number there though, but it has an influence, a wind in the market, but it is not a liquid number to play with. The weekly, as I indicated, we've got this transition that we're sitting at, something to think about. Lower levels before the market opens on the for the SPX weekly are down pretty low. So pretty low bar to jump across. We're going to be up in transition, most likely with the CPI. You can see a lot of put domination below us in terms of the net deltas, so I want to pay attention to that. I'd really like to see us move up into this 3840 area and start pushing higher. It's going to be difficult, as you can see. We've got a lot of overhead still to play with, but 3,900 is the clear target overall in the SPX PM settled. 0 DTE, fairly tight transition, negative gamma. We closed here. We're probably going to open in this area here, something of that nature, something to think about. 37's line in the sand to the downside for the short term on the 0 DTE. So contributions today decisively on the negative side here. We need to be above this 3805 level to escape the influence of the negative gamma. Still overhead though from the put dominated deltas here. Suggests that there could be some fuel to the upside from the 0 DTEs, but the overall magnitude is not very large. This 270,000 contracts coming off today in the SPX is not a big number in the big picture. Taking a look at tomorrow's projection, very fat, wide transition zone. We need to be up again above that 38. Here it says 2025. I would like to see us in the overall complex up above 3840. You'll see why here in a minute. The 3850 is a clear line in the sand for tomorrow. Probably an upside target if we can get there. We need a lot of transitional changes in the delta. So structure matters, and right now it's a very fat, very wide, loose range right now. We're in it, so I'm expecting a lot of volatility throughout the day and into tomorrow. The overall combo complex, which is the AM and the PM settled, a lot going on here. I'm not going to read these to you. Please pause your players and read the bubbles here. Overhead, a lot of put domination in the deltas. These are in the money, and as you know, when in the money puts are monetized, that could be additional fuel to the upside, so I want to pay attention to that. Here's that transition range for the entire complex and that 3840 number that I'm looking for, but you can see right here at 3800, we really need to start changing the structure overhead in order to advance, and that's a big deal. To the downside, we were green, we're still green, so there's a lot of calls that are in good shape down here and are supportive of where we are right now. When they come off, I'm not going to show the moneyness charts here today, but where they come off will be important, and I would urge everyone to run those moneyness charts and get a good sense of when the in the money calls are expiring within the SPX complex. Today's projection, I just want to highlight a couple things. They're all green, so we're actually projecting an upward move today ahead of the CPI. One of the things that we saw from yesterday is that you can see these numbers are inverted relative to where they are in the past. When we see this, this is due to a large number of puts going into the complex. This could be short dated. These are out of the money, and it shifts the balance right now to the downside. So we'll have to watch and see what happens with this today. This could be, again, more fuel to the upside, and we're just going to have to watch how that plays out. Last slide, looking here at the overall SPX structure, here's that 4100, here's that 3500. You can see the magnitudes are very, very close to each other, so that's something to pay attention to. 3860, we don't know who the actor is here, but this is remaining persistent. Here's that JPM 3835 short contracts, 44,000 of them at the end of December. Not liquid, but certainly in play. Puts a wind in on the structure, and you can see where we are. We need to start bridging above this if we have any hope of moving into a positive structure here and advancing through November. So just be aware we're well below transition right now. We need the CPI, we need other things, the structure to force people to start buying calls and closing puts in order to go higher here. So with that, I'll leave you. If you have any questions or comments, come join us at GammaEdge.us. Click on the pricing tab, fill up the blanks, come on in, 14-day free trial, everything turned on. You get a chance to meet the traders. We have some educators. Michael's great at that, and we'll walk you through various setups. Follow us on Twitter at GammaEdges with an S, and then here on YouTube. If you like today's content, please smash that like button. Let me know. It gives me immediate feedback. And then, of course, follow us. And when you do, you'll get notified of when Taylor posts, which is every day, as well as myself. So we try to post 2 videos a day, and you'll get notified of what we're seeing and how to make this stuff actionable in the overall market. So with that, take care, and hope to see you in the Discord.